All right, let's try to make sense of today because on the surface, it's a real head scratcher. Over the weekend, the world was on edge, watching a serious conflict brew in the Middle East. Now, you'd think that would send the markets into a tailspin, right? A sea of red. But that's not what happened. So let's dig into this paradox.
This is really the question of the day, isn't it? I mean, you've got threats of war, a critical global supply line is in jeopardy, and yet the market went up. It seems to defy all logic. So what on earth is actually going on here? And here it is. You can see the disconnect right here in black and white. Despite all that global tension, the Dow, the S&P 500, and the Nasdaq all ended the day up. Pretty solidly, too. To understand why, you have to realize there were two huge and frankly contradictory stories pulling the market in totally different directions. Okay, so first, let's talk about the story that had everybody glued to their screens, the escalating crisis in the Strait of Hormuz. This was the big, scary headline that really set the tone for Monday morning. The whole situation moved incredibly fast over the weekend. It kicked off Friday with direct military action. Then on Saturday, a diplomatic effort fizzled out, which sent a huge wave of fear through the energy markets. But then, Sunday happened. And we got this little glimmer of hope, reports that a few tankers, not Iranian ones, had actually managed to get through the strait. And let's just be really clear why this one little waterway matters so much. The Strait of Hormuz isn't just some piece of ocean. It is a critical choke point for the entire world's energy supply. Any kind of disruption there sends shockwaves through the global economy. And you can see that fear priced in right here. When the tension was at its absolute peak, Brent crude oil shot past $106 a barrel. That was the market basically bracing for the worst-case scenario, a total long-term shutdown. But then, look what happened. That glimmer of hope we talked about, just a few ships getting through, it was enough to talk the market off the ledge. The price came back down, actually finishing the day almost 3% lower. So while things were still really tense, that initial worst-case panic started to fade. Now, here's the twist. While all eyes were on oil prices, there was this other, incredibly powerful story quietly driving the market higher. The AI boom. It wasn't just chugging along, it was hitting the accelerator. I mean, just get a load of this. Nvidia's CEO, Jensen Huang, drops this bombshell at their AI conference. $1 trillion in chip sales by 2027. A number like that just makes investors sit up and pay attention no matter what else is going on. It's a signal of confidence and demand that's just on another level. And it wasn't just Nvidia making waves. Over at Meta, there were all these reports flying around about a potential 20% cut to their workforce. Now, the company said it was just speculation, but the reason for the rumor is what's so important here. It's all about a massive pivot to help pay for the insane amount of money they're pouring into their AI infrastructure. And, Wall Street loves to see cost cutting. Analysts over at JP Morgan figured that if these job cuts happened, it could save the company up to $6 billion a year. That's a pretty significant chunk of change for sure. But to put that number into perspective, that $6 billion in savings is, as one analyst called it, just a dent in Meta's total yearly expenses, which are projected to hit $169 billion. It just shows you the mind-boggling scale of investment that big tech is pouring into AI right now. It is an arms race, plain and simple, and it's completely reshaping these companies. Okay, so you've got these two giant forces at play, a classic geopolitical oil scare on one hand and a futuristic tech gold rush on the other. So let's take a look at how that created some very clear winners and losers today. Yeah, the split is pretty obvious when you lay it out. In the winner's circle, you have the AI stars, Nvidia and Meta, just riding that incredible wave of optimism. And of course, energy stocks got a boost from all the volatility. But on the losing side, fertilizer companies. See, they had actually rallied on fears that the strait closure would choke off their supply chain. So when the news hit that a few tankers got through, well, it signaled that maybe the supply chain wasn't completely broken after all, and their stocks took a nosedive. And all of this leads us to the final and maybe most important player in this whole drama, the Federal Reserve. Because for them, this combination of events is basically a nightmare scenario, making their long, hard fight against inflation even more complicated. You see, for the Fed, the biggest fear here is something called an inflation shock. They were just starting to feel like they had a handle on things, And now the threat of a sustained spike in oil prices could undo all of that hard work by driving up the cost of pretty much everything, from gas at the pump to the food in our grocery stores. And the timing couldn't be worse, because they have a big policy meeting this very week. Everyone expects them to hold rates steady for now, but honestly, that could change at a heartbeat. One big swing in oil prices could completely change their calculus, and all that talk we heard about future rate cuts, well, that's suddenly on very shaky ground. This uncertainty is the new normal.
So we end up right back where we started, with this strange paradox. Today's market was a massive tug-of-war between two powerful narratives. One is this timeless old-world conflict over physical resources and land, and the other is this futuristic sci-fi race to build and control artificial intelligence. It really leaves you with a huge question to think about. Which one of these powerful forces is actually going to define the world we live in?